King Manufacturers is not only, it's really actually more of a financial statements question with a little bit of inventory included. But if you haven't done the unrealized profit story, you couldn't have prepared King Manufacturers. So what is nice about this question is that it is really an integrated question. It's not a difficult question, but it is quite a lot of principles that you should be able to do. So King Manufacturers, a registered VAT vendor, and the VAT rate is 14%. Prepared a trial balance below for the year ended 30 April 2013. And then if we look at all this information, what is required from us? Prepare the statement of financial position as at 30 April 2013. Comparative figures and notes to the financial statements are not required. Now, although the notes are not required, for certain line items on your statement of financial position, such as trade and other creditors, trade and other debtors, you have to compile some kind of note to yourself in order to derive at the final figure. So it is not required, but by implication, you will have to do the note in order to get the total figure. Good. Let's see what we have here. They gave us a trial balance as at 30 April 2013. Before they give us the trial balance, let's just read here. The regular accountant, Mrs. Queen, had to urgently take leave to go to London to take care of personal family matters. As a senior accountant, he must now assist Mr. King in finalising his financial statements, and she left in a hurry, and some of the adjusting entries and nominal accounts was not closed off as yet. King Manufacturers does not record settlement discounts at the time of purchase or sale. What does that mean? That means that they don't make use of allowance for settlement discount accounts. So they do not record settlement discounts at the time of purchase or sale. However, settlement discounts on credit sales are offered at 5% if the client pays within 10 days and the client has 30 days to pay. So although they do not create an allowance for settlement discount, as soon as the debtor is going to pay within the 10-day period, they will receive a 5% settlement discount. And then you will have to adjust your records where you're going to decrease your sales amount and you're going to then clean out the outstanding debtors with that amount as well of the settlement discount offered. Please, there is no such thing as a settlement discount granted or discounts granted or received item or account in our books. King's Manufacturers uses the perpetual inventory system and cost is calculated on the first in, first out method of inventory valuation. And then they give us the trial balance, bank overdraft, property, plant and equipment, and here they gave us the carrying amount. Financial assets, you know that is also part of our non-current assets. Capital drawings, loan from Finbank, raw materials, work in progress, finished goods, allowance for unrealized profits and consumable stores. Now, those items that I've colored in there, that is all my inventory items. So as at 30 April, they use a perpetual inventory system. They've told us so. This was the closing balances of all my different types of inventory. Now, here clearly you can see there's an allowance for unrealized profit. So clearly they transfer the finished products from the production area to the sales department with a little bit of an unrealized profit attached to that. VAT control, petty cash, call deposit, savings account, debtors control, allowance for credit losses. There we have it. And take note of this and make a little note in the back of your mind. Prepaid insurance. Yeah, that one is a little bit of a bummer. So remember that one as well. Creditors, pay-as-you-earn payable, medical fund payable, pension fund payable, UIF payable, And now we have a one-line item, profit and loss account with a total. So in the beginning, they've told us that Mrs. Queen, or whatever her surname was, she hurriedly prepared some of the adjusting entries and closed off the nominal accounts. So therefore, we do not have individual profit and loss accounts anymore because she has closed them all off against the profit and loss account. So all adjustment entries that we are going to pass, which has an impact on our income statement, will have to be passed against that total of 589,310. Now this is a very good way and a nice way of asking you income statement adjustments as well as focusing then on the statement of financial position, because you will have to know what is the impact on your profit and loss account if you want to complete your statement of financial position. Okay, then adjustments and additional information. Before going on leave, Mrs. Queen closed the VAT input and the VAT output control accounts to the VAT control account. So there on top there, we see that we work with VAT controls. As we said, we do not have a separate input and output account anymore. We only have the control account. Good. So there's no action required from you. Property, plant and equipment consists of land and buildings, factory machinery and equipment, vehicles, office equipment and furniture. Mrs. Queen made all the adjustments for property, plant and equipment before leaving, and you can assume that the carrying amount in the trial balance is correct. Now, you know what a statement of financial position looks like. You also have a very good idea what needs to be accounted for in that statement of financial position just by looking at your trial balance. So there they've told us that property, plant and equipment is 1.6 million, and they tell us that that is okay. That is correct. So by starting this question, you would have written down the template of a statement of financial position, both the asset side and the equity and the liability side. And you know that assets starts with non-current assets, and underneath non-current assets, my first line item is property, plant and equipment, 1.6 million. So if we then start filling in the picture, the template that we have created, we will have King Manufacturers Statement of Financial Position as of 30 April 2013 Rand assets. Non-current assets, property, plant and equipment, 1.6 million Rand. And then I'm done with that point. So I can move on to the next point. It is King Manufacturers policy that goods are transferred to the sales division, including a 15% manufacturing profit. So a manufacturing profit, we've said to each other, is our unrealized profit. When we transfer the goods from the production area to the sales department, the production area adds 15% to the actual cost of goods manufactured when they transfer it. These transfers were correctly done throughout the year. Mrs. Queen did not have a chance to adjust the allowance for unrealized profits based on the closing inventory on 30 April 2013. So what she says is that everything was posted correctly during the year. The only thing that she hasn't done is here we have allowance for unrealized profits of 29,100. She said that figure has not been updated. Now we know that our finished goods account have a closing balance of 209,300. So our closing inventory of finished goods was 209,300. And if we want to work out what the closing balance should have been on our allowance for unrealized profit account, it would have been 209,300 times 15 divided by 115. And that then gives us a total of 27,300. So what are we going to do in order to get this down to 27,300? We have to post a debit to that account in order to reduce the balance. And the debit we're going to post is going to be 1,800 Rand. So 29,100 minus 1,800 will give us then a total of 27,300. That is what we want. Now, what is the debit side? This is the debit side of the entry. What is the credit side of the entry? The credit side of the entry would have been posted against our unrealized profits P&L account. And then our unrealized profit P&L account would have been transferred to cost of sales. So it is a credit that would have been passed against our income statement account. And any credits that we passed against our income statement account is income. So that increases profits. So I would have added 1,800 Rand to my profit figure. There's the debit and the credit. Remember, we are doing statements, financial statements. You have to do the statement of financial position. So this thing has to balance at the end of the day. If you're only going to post one-legged entries, I promise you nothing is going to balance. Included in debtors is an amount of 93,480 Rand that resulted from a large sale made to a regular customer, Castle Homes, on 28 April 2013. Castle Homes always take advantage of the settlement discount, and an allowance account should be created. Now the question tells us here on top that usually they do not record settlement discounts. Usually they do not make use of allowance accounts. But because it's year-end now, it is just prudent to show my outstanding debtors at the actual amount that I'm going to receive from them. We are not going to receive 93,480 Rand. So in order to create the allowance account, what is the 93,480 Rand? That was the invoice value of the sale. So how do we create an allowance account? We take the invoice value, we remove the VAT. And then we've said that our debtors is entitled on a 5% settlement discount if they're going to pay within the period of 10 days. So if we want to create an allowance for settlement discount, it is going to be an amount of 4,100 Rand. Now, what is our accounting entry going to be? Well, obviously, we're going to have here an settlement discount. Where am I going to put that? Where is my debtors? Debtors control. We're going to have here, let's do it like that, an allowance for settlement discount. At the end of the year, in my statement of financial position of 4,100 Rand. Now, is that a debit or a credit account? That, guys, is a credit account because it has to reduce the value of my debtors. So if that is a credit, where are we going to post the debit to? The debit we would have posted against sales. I don't have sales. I only have a profit and loss account. A debit in my profit and loss account means that our profit is going to reduce with the amount of the debit. So minus 4,100 against our profit and loss account. Good. During the year, debtor owing 4560 was declared insolvent. King Manufacturers received already 40 cents in the rand, and the remainder should have been written off. The only entry made was to debit the bank account and credit the debtors control account. When can I debit the bank account? When I actually receive money. How much have I received? I have received 40 cents in the rand of 4560. So what is the remaining balance on that account? 4560 times 60%, and that equals 2736. Now what is going to be our accounting entry? We would have debited credit losses. With what? With a VAT exclusive amount. So the 2736 divided by 1.14, and that gives us 2,400. We would have debited our VAT control account, our VAT input account, with a VAT 2,400 times 14%, 336, and we would have credited our debtors with a full outstanding balance that we're going to write off of 2736. So here we would have said debtors control minus 2736. And now the VAT portion, this VAT input I have a net output there. So here it would have reduced my total VAT output with 336, and my credit losses is an expense. So that would have reduced my profit and loss account, my net profit there was 2,400 Rand. Then my accounting entry is in balance, and I should not have difficulty in balancing my statement of financial position. The allowance for credit losses should be adjusted to 5% of outstanding debtors. Now, the first thing that I have to take note of is that my outstanding debtors is no longer 141,360. It's 141,360 minus 2736. The second thing that I should take note of is that I have an allowance for credit losses already with an existing balance of 7,800 Rand. So, the first thing that we have to do is to determine what is the outstanding debtors balance at this point of time. It was the original 141,360. We have done this adjustment entry of 2736. So that gives us a final balance on my debtors account of 138,624. Then we said, okay, what are we going to do? 138,624, we're going to take out the VAT and we're going to multiply that by the 5%, and that is actually giving us a balance of 6,080. So at the end of the year, we would like there not a balance of 7,800, we would have liked there a balance of 6,080. Good. How are we going to derive at that balance of 6,080? Allowance for credit losses, that's 7,800, that's a credit balance. So how am I going to reduce a credit balance? By debiting the allowance for credit losses account. With how much? The difference there is 1720. So I'm going to debit this account. It will reduce the balance, 1720, and I'm going to credit my profit and loss account. And once I'm crediting my profit and loss account, it's going to increase my profit with 1720. So let's do our debtors note up till now, because we can. Debtors control is now 141,360 less 2736. So our net trade debtors, 141,360 less 2736, which gives us a total of 138,624. Then we're going to subtract from that the allowance for settlement discount. And then we've worked that out. That is going to be 4,100. So less 4,100 allowance for settlement discount. Then we're going to subtract from that the allowance for credit losses. What amount? The closing balance. So the closing balance there of 6,080. And that gives us net trade debtors then of 128,444. Great. Up till now, we haven't done much about inventory. For the past 3 years, King Manufacturers had space in the warehouse that has not been utilized and was rented out to Palace Productions. On 1 September 2012, Palace Productions required more space, and this was rented to them at an increased rental of 30%. The total proceeds, very important words, of rent received was 44,745. Why is that so important? Total proceeds means, in other words, the actual amount received in the bank account for rent was 44,745. So that amount obviously will include that. And they say that over and above the fact that it includes that, it also includes the rent for May 2013, so for next month. And now we're back to our simple formula. So what you should have taken out is 44,745, taken out the VAT first, and that would have given you 39,250. And then you say, well, for a period of 4 months, we've paid a normal rent. And then, remember, 1 month was received in advance, so a period of 9 months, we have received 1.3x after the 30% increase in rent, and that equals 39,250, not 44,745, the VAT exclusive amount that would have been posted to the rent received account. Now, if we work out the x in that whole scenario, x is then equal to 2,500 Rand. So how much was the rent that we've received in advance? Not 2,500, 2,500 times 1.3. And that actually gives us a total of 2,750, if I remember, 3,250. 3,250. So 2,500 with the escalated rent gives us 3,250. Good. Rent income received in advance. That 3,250, does that include VAT? No. Do I have to adjust my VAT control account? No. Why not? Because I took care of the VAT when I made the payment. So the VAT is already, or when I received the payment, this was rent received. So the VAT has already been recorded. So this income received in advance would only be the VAT exclusive amount of 3,250. What does that mean? What am I going to debit? What am I going to credit? I'm going to debit my rent received account. So if I'm going to debit that, I'm going to reduce my profit and loss. I don't have here somewhere income received in advance in my trial balance. So let's do make an income received in advance somewhere. Where's my creditors? I want to do it here under creditors. Income received in advance. Why here? Because that is a part of trade and other creditors. So it's an other creditor, 3,250. Okay. Now let's continue with the question. On 1 March 2013, King, this is important, King manufacturers paid 12,312. They paid so much. So when they pay so much, that would have included VAT. And they paid so much for a 6-month insurance policy, not a 12-month thing, a 6-month. Remember, we are now 30 April 2013. So that means that 2 months have lapsed since the payment was made. So the prepaid amount was equal to an amount of 4 months. So there, 4 divided by 6. 4 of the 6 months was prepaid. Of what? Not of 12,312, but of 12,312 divided by 1.14. And that gives us a total of, I'm going to tell 7,200. So 7,200 was the prepaid amount. What would we have done with the 7,200? We would have debited prepaid insurance or prepaid expenses, debit, 7,200, and we would have credited our insurance expense account with a 7,200. Insurance expense account, that is income statement account. And once we credited income statement, it is going to increase our profits. We have, though, something that I've said in the beginning that you should park in the back of your mind. Prepaid insurance here of 10,800. So what are we going to do? We want that balance to be 7,200. So we would have debited our profit, and we would have credited our profit and loss account, and we would have debited our prepaid insurance account, 7,200. Is the 10,800 a valid amount? No. So we would have taken that out. So we would have credited our prepaid expenses account, and we would have credited our we would have credited our prepaid expenses account to take it out, and we would have debited, which would reduce our profits with 10,800. Prepaid insurance is a debit balance there that is no longer valid, so we're going to take it out. When we're going to take it out, debit balance, it means that we're going to credit that account with 10,800. If we credit that account with 10,800, we're going to debit our expense account with 10,800. When we debit a profit and loss account, we're going to reduce our profits. So that is where the 10,800 comes from. Good. And then for the 7,200 that we've prepaid, we're going to create here a debit of 7,200. So at the end of the day, we want a debit in our books of 7,200. If we're going to create that 7,200 debit there, we're going to credit our profit and loss account, and that is going to increase our profits with 7,200. Goodie. The loan from Finbank taken out on 30 April 2012, so it was right at the end of the previous financial year, is secured by the land and buildings. A 25-year loan is repayable in annual installments of 38,250 Rand, including capital and interest at a rate of 12%. So as soon as an installment includes capital and interest, you have to split that installment into the capital component and into the interest component. The first payment was made on 30 April 2013. That was year end. Mrs. Queen was unsure how to record the payment and credited the bank, which is 100% correct because that was the correct payment to make, and she debited the loan. Now, what should have gone against the loan account? Only the capital portion of that installment of 38,250. So let's work out what was the capital that we have to calculate our interest on for the current year. Now, remember she debited the whole 38,250 against the loan account. So we have to reinstate that if we want to work out what the original outstanding capital account balance was. And there's our total loan from Finbank, 261,750. So 38,240 plus 261,250, we're going to reverse that entry to see what the total amount was, and we see that the outstanding loan balance was 300,000. Now that loan was outstanding for the full year. So 300,000 times 12% will give us our interest amount of 36,000 Rand. Now furthermore, what we need is we have to determine what was the capital amount repaid. So 38,250 less 36,000 would have given us the capital repayment of this year equal to 2,250. Because we have to do the statement of financial position, we will also have to work out what the interest is going to be next year, so that we can work out what the capital repayment next year is going to be, because that is going to be the short-term portion of the long-term loan. So if we take the total amount of 300,000, which is our loan account balance, less the amount that we should have debited against our loan account, which is only 2,250, we would arrive at the total outstanding loan at the end of the year, which equals 297,750. So now 297,750 multiplied by 12% is going to give us our interest payment for next year. And that is going to be equal to 35,730. 35,730. Now, what is then the capital repayment of next year? That will be our installment of 38,250 less the interest included in that installment for next year, 35,730, and that will equal then a total of 2520. So the 2520 is the short-term portion of the long-term loan. What is going to be the long-term portion? What is the total outstanding loan amount for at the end of the current financial period? The total outstanding amount is going to be the 300,000 less the 2250, so the 297,750. And if I'm going to subtract then from that the short-term portion 3520, I'm going to get the long-term portion of the loan, which is equal to 295,230. Good. So what are we going to do? Included in our loan account, she has passed the full installment paid. So we do not want to fiddle around with a capital amount that she repaid because that's already there. We only want to fiddle around with the interest portion. And what did she do? She debited the full installment against that account. So we're going to reinstate the interest. So we're going to credit this account with the interest portion of 36,000 Rand. And we're going to debit our income statement with 36,000 Rand being the interest which was paid on the loan account. It's an expense account, so therefore it's going to reduce our profit and loss account. And that is really all adjustment entry that we need to pass. Let's quickly see how we're going to disclose that in our statement of financial position. Under non-current liabilities, we're going to show the long-term portion of the loan. So loan from Finbank, in total 295,230, and there we've worked out the long-term portion 297,750 less the short-term portion payable next year of 2520, 295,230. And then the short-term portion of 2520, which we have calculated there, that we are going to show underneath our current liabilities. So the short-term portion of the long-term loan under current liabilities is going to be 2520. In total though, if I add the 295,230 to the 2520, at what amount am I going to get to? To the total outstanding loan at the end of the year, 297,750. What is 297,750? It was the original loan of 300,000 less the capital portion repaid this year, which was 2250, and that gave us the 297,750. Good, on 1 April 2013, Mr. King appointed an office worker, Mr. Duke, at a gross monthly salary of 4,000 Rand. Good. At the end of April, he realized that Mr. Duke had not been included in the payroll run and asked Mrs. Queen to issue him a check of 2,000 Rand. So he has been paid 2,000 Rand. Mrs. Queen debited salaries expense and she credited the bank, which is not too far wrong because it was a salary and she actually paid this person 2,000 Rand. She did not have time to do any adjustment entries prior to leaving the country. The following information is applicable to of Mr. Duke. Now, let's start here and we work out what should have been passed. Now we know that all these calculations are being based on the gross salary. So the gross salary was 4,000 Rand. Pay as you earn was 30% of that 4,000 Rand. Okay? That is being paid, worked out on gross salary, which equals 1,200 Rand. Then UIF, 1% on gross monthly salary. So UIF, 1%, and that gives us a total of 40 Rand. Now let's do the employer contributions on this side. Oh. Good. The employer, King Manufacturers, contributes equal amounts to the UIF and the pension fund. So if the UIF that we deduct from that guy was 40 Rand, then it means, I just want to write here UIF, the company also contributes 40 Rand to the UIF. Then they say Mr. Duke's pension fund contributes 8%, so pension fund, 8% of 4,000 Rand, and that gives us a total of 320 Rand. And the employer also contributes to the pension fund, same amount, 320 Rand. Good. So what was the net salary of this guy? And remember, what are we supposed to pay the guy? We are supposed to pay him his net salary, and that is his gross salary after all deductions has been taken into account. So his net salary there would have been an amount of 2,440. How much did we actually pay this guy? They issued a check for him for 2,000 Rand. So at the end of the day, they still owe him an amount of 440 Rand. Good. What was the total employer contributions for this period? That was a total of 360 Rand. Good. Now, what adjustment entries are we going to pass? Let's do the whole journal entry thing. We would have debited salaries with how much? With 4,000 Rand. Okay. We would have debited our, or let's do that this way. We would have, what did she do initially? She debited salaries expense and credited bank. So if we're going to debit salaries with a total of 4,000 Rand, we must surely reverse that 2,000 Rand. So here we're going to credit salaries as well. With that 2,000 Rand, and then we've taken the wrong entry out of the books. Then we're going to credit our creditors. So our creditors for UIF, which was going to be 40 Rand. Our creditors for the pension fund, that was going to be 320 Rand. Our pay as you earn, let me just scroll down here. SARS, in other words. That was going to be 1,200 Rand. And now if I work out my balancing figure in this whole equation, then you will see that my creditors for salaries is going to be the additional amount of 440 Rand. And what is the 440 Rand? That is the amount that I still owe this person, Mr. Duke, whatever his name was, that was appointed. I had to pay him 2,440. I only paid him 2,000 Rand, so I still owe him 440 Rand. So on this side, what would we have done? We would have debited our salaries or salary-related expenses with a company contribution of a total of 360 Rand. We would have credited our UIF here also with 40 Rand, and we would have credited our pension fund there also with 320 Rand. Good. So now we can go and determine what do we have to post against our P&L. Against our P&L, we're going to post now a 4,000 Rand debit, which is going to reduce our profits. So going back here, it's going to reduce our profits with 4,000 Rand. It's not multiplied, reduce. And then the second one here is we're going to increase now, again, our profits with 2,000 Rand, because that is a credit against salaries, and a credit against the income statement is going to increase. Plus, see, a total of 2,000 Rand. Good. Then we've done that one and that one. Creditors for UIF. Now here we're going to increase that with 80 Rand. Now we have UIF payable here. So we have existing accounts. We're only going to post that credit there. I haven't posted that 360 Rand, so that's also an expense. So that's going to reduce our profits there, 360 Rand. We have pension fund in total there, 640 Rand. So that's going to increase our pension fund payable with 640 Rand. This guy doesn't have medical aid, but there's for sure pay as you earn. That was 1,200 Rand. So there we've posted that credit entry there of 1,200 Rand. The only thing that we must now remember, we've posted that, we've posted that, we've posted that, posted that, we've posted that, we've posted that, and we've posted these two, 4,000 and the 360. This one is a new one, creditors for salaries, that we still have to pass in our books to make our books balance. Let's do that here. And that's an additional creditor that we have to take into consideration. That 49,000 is up to us here. Right, so now we can complete most of our creditors. We know that our creditors started off with a total of 59,280. And then we had income received in advance of 3,250. So let's quickly have a look what our creditors was going to look like. Trade creditors, 59,280. We had income received in advance, there's that one, 3,250. Then that was the 3,250, that one there. Then pay as you earn would have been the 49,000 plus the 1,200. 49,000 plus 1,200, which gives us 50,200. We would have had creditors for salaries for 440 Rand. So here right there, creditors for salaries, 440 Rand. We would have had medical fund payable of 22,000. There was no adjustment entry against that one. So medical fund, 22,000. That would have been there. Then we would have had pension fund payable, 22,400 plus 640 Rand. Pension fund, 640 plus 22,400, and that gives us a total of 23,040. We would have had pension UIF payable 2,800 plus the 80, UIF 2,800 plus the 80, and that gives us 2,880. The only thing that we haven't accounted for is VAT control as yet. And now I can tell you, in any case, there's no further points here in this question. So our VAT control, we could also include there, 34,520 less 336. So that would have been a total of 34,184. So if we add all these creditors together, it gives us a total of 195,274. And that 195,274 is going to be under current liabilities, trade and other creditors, 195,274. Good. Let's actually move that one up one. All right, I'm going to leave it where it is, 195,274. Right, now we've done trade and other debtors, we've done short-term portion of the loan, we've done the non-current liabilities. Let's go to our trial balance. Bank overdraft 8,500. We know that we should show that as a separate line item under current liabilities. Bank overdraft 8,500 rand. Then we've dealt with property, plant and equipment. Financial assets, 54,000 rand. Now we know that financial assets form part of our non-current assets. So in the second line item under non-current assets, financial assets, 54,000 rand. Capital, part of equity, 1,271,000. So here under capital, 1,271,000. Drawings, as part of equity, it's going to reduce equity with 62,000. There it is, drawings, 62,000. Let's run through it first, then we'll go to the profit one. Drawings, loan from Finbank. Here we've already accounted for the long-term portion and the short-term portion. Now, raw materials, work in progress, finished goods, and consumable stores. I have to add all these account balances together, and then I would have subtracted 27,300 from my finished goods account in order to derive at my final inventory figure. So inventory would be all those amounts added together less our unrealized profit of 27,300, and that gives us total inventory of 436,500. We've already dealt with our trade and other receivables, the 135,644. That would have, we've only dealt with it up to the net trade debtors. Prepaid insurance, remember we've done that one. Prepaid insurance was in total just 7,200 rand, which we have added to our net trade debtors, 7,200, and that gave us the total of 135,644, 135,644. Good. With that one, 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 petty cash, call accounts, and yeah, that seems to be all. Petty cash and call account, that would be cash and cash equivalents. So cash and cash equivalents, those two amounts together, 25,500. And then if I've added up all my asset accounts, it gave me a total of 2251,664. What have we haven't accounted for? We've accounted for that, have accounted for that, we have accounted for that. So the only thing that we haven't accounted for is our total profit for the year. So we would take our 589,310, we would have added and subtracted all these different items, and once we've done so, we would have derived at a total figure for the year, profit for the year, 541,120. And that 541,120 is going to increase our equity. So capital plus our profit for the year of 541,120 less our drawings will give us our net equity figure at the end of the financial year of 1,750,120. If we add then our long-term portion of our loan, plus if we're going to add all our current liabilities, that is the total there of 206,294, and that will have given us a total liabilities and equity 225,1644, 225,1644, 664, sorry, 664, 6, I think, yeah, is definitely a typing error, 644, clearly. So this whole thing is in balance. And that is the end of King Manufacturers. A good exercise testing good basic principles.